Good morning, and welcome to the Leap Podcast, your concise, level-headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Monday, the 8th of December, 2025. The past few days have highlighted a market in consolidation, with short-term institutional caution offset by accelerating structural inflows from traditional finance. Bitcoin is trading at $90,483, down 0.13%, reflecting modest profit-taking amid broader risk-off sentiment. Listen for the summary at the end, but for now, let's leap in. Institutional demand shows signs of temporary weakness, but longer-term catalysts remain firmly in place. On the cautionary side, recent Bitcoin ETF flows turned negative, with a weekly net outflow of 87.7 million, including notable redemptions from ARKB and IBIT ETFs. BlackRock clients reduced combined BTC positions by 107 million, contributing to declining inflows hitting 8-month lows. This reflects selective rotation rather than outright rejection, as institutions pause at current levels. The counterbalance is robust. France's BPCE banking group begins rolling out Bitcoin trading today to millions of retail customers via its apps. The top 100 publicly traded companies now hold over 1 million BTC collectively. Vanguard has enabled BTC and ETH ETFs access for its 50 million clients. Japan's regulator advances tax cuts and ETF proposals, and MasterCard expands Bitcoin spending capabilities for over 1 billion users. MicroStrategy bolstered its position with 1.44 billion in cash reserves during the dip. Wales added 350 million in BTC in the past day, even as leveraged liquidations reached 280 million, predominantly longs. Ethereum, $3,119, up 0.53%. Institutional adoption continues to build momentum despite mixed ETF flows. Positive developments dominate. Tom Lee's BitMine fund added 22,676 ETH, which is worth 68.67 million, pushing its holdings to 3.16% of circulating ETH supply. Vanguard opened ETH ETF trading to its massive client base, while Amundi launched a tokenized fund on Ethereum. The recent Fusaka upgrade enhanced scalability, and stablecoin supply hit a record 196.5 billion. On the cautious note, ETH ETF saw a 75.2 million net outflow on December the 5th, driven entirely by BlackRock's ETF snapping a prior inflow streak. Exchange supply sits at historic lows since 2015 at 8.7%. These figures are notable from a market structure perspective and may be of interest to those tracking liquidity dynamics. Solana, $135.21. Enterprise and institutional interest provide steady underpinning. Western Union's planned USD stablecoin launch on Solana in early 2026 targets high inflation markets with prepaid cards, driving stablecoin supply to new highs on the chain. US spot SOL ETFs recorded 15.68 million inflows on December the 5th, with weekly figures reaching 19.2 million. The upcoming Solana Breakpoint Conference, which is on December the 11th to the 13th in Abu Dhabi, is anticipated to deliver over 80 announcements, historically a catalyst for ecosystem momentum. Broader meta trends point to accelerating TradFi integration. Major banks pilot custody and trading via Coinbase. The Commodity Futures Trading Commission, the CFTC, greenlights spot crypto on registered exchanges, and legislation advances a potential strategic Bitcoin reserve. Institutions appear to be accumulating during retail capitulation, inverting traditional cycle dynamics where banks enter amid consolidation rather than euphoria. In summary, we are observing a split market. One side marked by loss aversion, ETF outflows, leverage liquidations, and short-term sentiment resets. The other side, defined by irreversible adoption, major banks and asset managers opening crypto access to millions of clients, sovereign level interest, and regulatory tailwinds that legitimize the asset class for conservative capital. Historically, periods marked by institutional infrastructure development alongside reduced circulating supply and heightened caution have coincided with notable changes in market dynamics. Today, infrastructure and participation mechanisms continue to evolve, independent of short-term price movements. That concludes your market update for the 8th of December 2025. Remain calm and stay informed. Please see the description on YouTube and Spotify for more information. Thank you for listening to the Leap Podcast.